Hello, everyone. It is a free Friday class. I've pre-recorded this, so let's begin. 50 basis points hike scares the market, a more aggressive Fed. It's April 22. Now, you bet that the market already knows about aggressive rate hikes by now because of inflation, but the market is still spooked about that 50 basis points, as well as, of course, the very negative fall of Netflix. The streaming platform is quite cheap, if you notice, but it just became cheaper and it has fallen another 35% after the earnings. You're seeing the streaming platform is now trading at about $220 below, and it has not yet bottomed out. The market is still looking to see where Netflix finally bottoms as it explores a new business model, possibly to introduce a lower tier ad supported model. We'll see whether that plays out, as well as how they will crack down the 100 million so-called unpaid subscribers of Netflix that are sharing those passwords. So we will see. Now, let's take a look how the markets have done this week. As the market has kept on thinking whether the NASDAQ has to fall down, it was a week until 2 days ago when finally the Netflix earnings broke the camel's back, i.e., the entire world is now fixated on how many companies will report negative earnings in light of Netflix's very dismal report. Is it a recession indicator? And the market is actually pricing in a ton of recession towards all the markets, and it has been a broad market sell-off all throughout. How should you handle this from a portfolio perspective? From a portfolio investing and perspective, well, investing is really volatile, and the potential to lose 20% in a given day or in a given week is highly likely, especially as the earnings season are coming out. It might be true that other stocks will also fall 20%, or they can probably be safe. So with that huge attention on earnings season this week and next month, I would assume that we want to protect our portfolios, and inverse funds have been the go-to of most people just to hedge their portfolios, to neutralize any drawdowns that will come about from their existing longs if they have any longs. Of course, if they have very little exposure on the long side or zero exposure, then they're just making money over on the short side. So the short sides, you can see that SQQQ just broke above $40. That is now a clear support, which would lead to the next move of at least 44 to 48. So we would assume that the people who want to get in on SQQQ tonight, even at $40, is still recommended, or even at 41.8, as it seems as if any rallies of the market, which will be blocked by anyone or rejected by anyone, is going to result to a buying opportunity in SQQQ or inverse funds. Okay, so the FAS, i.e. the bearish financials 3x bear, is also moving up. Just like most inverse funds, we've seen TECS, TEX, LabD, all of the biotech, Chinese sectors such as Yang. In general, all the bearish ETF funds have been going up as a result these past 2 days. And we're seeing that the financial bears are also riveting on the upside. This is FAZ. We are of the view that financials are going to be hit hardest when it comes to recession, as businesses would grapple with lower sales and therefore will have harder time either to pay the credit from the banks or just have a more difficult time servicing higher interest rates. So this is something that the world is going to have to grapple with, especially the USA. So my sense is that just like JP Morgan's results have shown a 45% decline, these are companies that you would want to short. Either you're shorting via the FAS or the XLF. So you go long FAS. Here we're still seeing buyers at 19 and 20, and the recent dip of 1870 is actually the low of that recent short-term drop, as we're seeing a continuation of the trend, possibly back to 22 and then potentially as high as 24. So for now, continue to go long FAS and SQQQ. We would also want to see sectors getting, which were previously strong. So we're just showing to you that even the strong names like Palo Alto Networks, even Tesla actually was not immune last night. Now, although I wouldn't short Palo Alto Networks or Tesla, I would still note that these strong stocks are getting resistance heavy. And it's possible that if they drop another 5 to 10%, it also spells very weak markets in all sectors, including cybersecurity names like Palo Alto Networks. So Tesla is a strong name. However, it was also sold down despite very good numbers. So we are seeing here actually a resistance in the market at 1,150 and then a lower high at 1,080 despite a very good number from Tesla. So my view is that Tesla and Palo Alto Networks will still be bought by the market, but the market might actually want a lower level here at about 890 or 840. So if you're a bull on Tesla, you would be buying on dips and you would actually sell on rips despite the fact that you were a bull, simply because you can clearly see a lot of resistances at these levels. Okay, so for the driving or the self-driving cars, you're seeing as Tesla falls, most of the Chinese cars are also falling down. And the US cars, we're seeing GM, Ford, XPEV, NIO, Li Auto, all trending on the downside, as most of the auto industry are actually having a hard time with higher commodity rates. So inflation is eating up on their costs and they have to pass it on to consumers. And you're seeing that it could spell lower sales, especially for the non-Tesla, for the non-strong branded EVs. So we're seeing the iShare self-driving IDRV trend down, and this is also going to be shorted even at $43. So we assume that the trend is your friend, and ultimately at 43, we think at least $35 is your destination. So keep short on these themes, and we have been looking to short these names since January, and we do believe that since January, 56 going to 35 is around 50%, oh well, near 50% low. So we do see a lot of drops still happening on this IDRV. GM, so then there you can see GM has been falling from 65 to 39 and could continue to fall further. Another 20% is possible, so keep short on your GM if you are looking to individually short a name in the EV sector. Now, amongst the cryptocurrencies, we have been bearish on Coinbase despite the strength of Bitcoin, as we have always felt that the market cap was very expensive compared to the competition like Interactive Brokers or even the cryptocurrency exchanges like Binance. So as Coinbase is going to grapple with more competition over time, it has been on the acquisition, although the acquisitions are being bought at very high valuations, which will actually be, in my view, dilutive from an earnings per share perspective on Coinbase. And so in my view, it is now ripe for another new low. We're seeing that Coinbase has already been hitting new lows despite Bitcoin actually steady at about 40,000. And Bitcoin could potentially also correlate to a lower market as the Nasdaq continues to get pummeled down. So as for Coinbase, however, I think that the recent resistance or the recent support of 160 and 150 have become resistance. And the next move, 210 minus 160 is $50 or at least 110. So we're looking to short more Coinbase if ever there will be rallies, as we think that these growth stocks will continue to get pummeled down. Ethereum is getting toppish here at about 3.2 and 3,000, and the next support is somewhere here about 2.4, despite the fact that you might be a big believer of NFTs. As you can see, the NFT launch of Coinbase hasn't been very much met with a lot of demand or volume, and we are seeing that even the Facebook plan of Metaverse is getting a lot of skeptics. So my sense is that it will take a longer time for these things to play out, and as these valuations for Ethereum might have gone up too soon, it's possible that Ethereum is still a short here about $3,000 and can actually go as low as 2.4, 2.5 within the short term. Silvergate has been a strong mover after earnings. However, we would argue that the rallies towards 170 and the recent high of 140 is an opportunity to short Silvergate. SI Silvergate here about 130, 140 are short ideas. You can short the shares at market if you wish, or even purchase a put option on Silvergate tonight. Spotify has been trading on new lows, especially after the market is grappling with the sustainability of subscribers in Netflix and is actually spilling over to other companies that are in the business model as well, whether it be in audio streaming such as Spotify or even the others like Roku and even on the likes of Disney. So I think all the digital advertising model businesses are getting a hit, and therefore you're seeing new lows right now for Spotify. It remains to be seen on earnings on whether they can deflect all these sellers. But it seems as if the bears are in control, and the bears still have these resistances to their benefit. So the bears have 160 and 120, and unfortunately, when it's a new low, most of the time it will continue further down towards a potential $80 for Spotify, which is still at least 20% down for these prices. Etsy is an e-commerce name that has fallen down sharply as, of course, the interest rate hikes have really hit all the growth stocks. The pandemic has also included a lot of growth for Etsy, but the market is really trending it all downwards as to how low these stocks can fall, even as 300 has fallen to 100 or 70% down. I do not know as the support can still hit as low as 85 as it's hitting new lows at current levels. So nothing good right now on the e-commerce sector. Shopify just broke 500. Etsy just broke another new low, and including C Limited, they just fell below $100. So we're just seeing negative feedback in the industry. Even Amazon has just broken $3,000. Now, this is another thing amongst the cloud names. Datadog is just right now trading at support of $120, but it looks as if it's actually hitting to a breakdown of that 1 year support of 120. If this breaks down, the next support is $100, and the more likely path is actually on the downside, as most people are grappling on how high those interest rate hikes will actually impact these tech valuations, despite the fact that they've already fallen. So just because $200 has fallen to 120 does not eliminate the risk that Datadog can still fall to 100 or even $80. So Datadog might be another short idea for the people just looking to short another expensive name in the cloud space or even in the security spaces. Now, airlines had a great earnings report. However, we would argue that Jets has rallied just right at resistance. And here at about $23, we would assume that all the airlines would still have a harder time going forward if recession is really going to happen in the world. So my sense is that limited upside on Jets and will be a good target to also short in the short term. So 23, 24 are good areas to be selling some Jets if you have been bullish on the airlines or any reopening travel demand. We're seeing Lululemon, very good earnings. However, right now, even TASA has a hard time sustaining those gains. So my sense is that even Lululemon here at 400 is being sold down, primarily just because of potential lower sales in the future if consumers will spend less on apparel. So we would be more on the lookout for a potential re-rating on the downside on Lululemon. 380 to 400 looks to be a sell area too. United Airlines, as you can see, a gap up last night on very good earnings and good guidance. My sense, however, is that it rallied straight to resistance. 55 and 51 are all resistance area heavy, and we would look to short on that sell area first before buying it. So supports have been here at $40. Although the downside might not be as huge, my sense is that it still is better to short these airlines rather than to go long. Bloom Energy, BE, we're seeing a lot of alternative energy names have been bought recently since around February, since the start of the Ukraine-Russia war, the invasion. But you can see that as it rallied straight around March 30, it has already dissipated, and all those gains are actually falling down primarily because of a lack of earnings exposure or profitability over the next few months. So you're seeing that before or ahead the earnings, the market's already selling it off. And my sense is that Bloom Energy can retest as low as $15 back to the February-March lows if the market is really scared of how aggressive the Fed will be. So caution is warranted as all the sectors are falling down suit. Delta Airlines at resistance, another area to sell into. Six Flags, you're seeing Six Flags has gone nowhere for the last year. And my sense is that despite the fact that the market's very much Looking forward to going out and going to theme parks. 45 to 46 might have a hard time on Six Flags, as the question is about the sustainability of that consumer spending. So 45, 42, there is a leeway for these to actually be resistance heavy. Same as for SeaWorld. SeaWorld is trading at $76, $70. I'd say that these are prime targets for another sell-off for tonight. American Airlines, there you go. All the airlines are getting sold down despite very strong earnings. We end with that. It is a short and sweet note. But we can actually take a look further on ideas later on Discord voice. But all I could say is that for the people who are looking to short the market, we have this topic last March 23, shorting our favorite hate lists. So we actually were shorting quite a while already, from January to February to March. And I would say that it's very clear that there are a lot of stocks that you could short, including the meme stocks. Most of the memes, however, have fallen. We have been shorting the memes, the SPACs, the unprofitable tech, consumer discretionary. And on March 23, despite the fact that we were thinking it could rally, and indeed it rallied until March 30, we felt that these stocks had leeway to fall. And when it hit a resistance, it was time to sell. And we saw that play out for Lucid, Rivian, XPEV, Neoli, Beyond Meat, Peloton, Duac, GME, EMC, BBBY, WeWork, Blink, EVgo, ChargePoint, Freyr, Lithium Cycle, QuantumScape, Laser. For the cryptocurrencies, yes, they also got sold down. WGMI, which is just a shorthand for We Gonna Make It, for the NFT club. NFTs, PLBY, Funko, Coinbase, MicroStrategy, Overstock, Silvergate. Out of all these names, most are already hitting new lows, save for MicroStrategy and Silvergate, which we believe you can still continue to short. Riot, Mara, Hotbit, FKNAN are all falling down to new lows. New FUV, Dash, Uber are all hitting new lows right now. All of the clean energy names that are unprofitable, we felt that they are good shorts. So far last night, Plug and Bloom Energy fell a lot. Clean Spark and EFSL was already falling way before, as well as for Ballard. Same for space names. ASTS and AST are good short ideas and are still falling as we speak for some space. Joby and Avav, so the EV tolls and the drones, were actually also a potential short because it's still early on for them to be profitable. They also tumbled down. So far, in terms of their discretionary, I'd say that from a short standpoint, you can short all of them, whether it be Chipotle, Cheesecake Factory, Blooming Brands. Wingstop has been falling down already, so it might not be easy to enter the Wingstop shorts, but the rest are still okay to short, even like Jack in the Box, Sweet Greens, Krispy Kreme, Dutch Brothers. So yeah, so there's no change in view. Last night was an opportunity to short more Marriott, short more Expedia, short more Booking. And unfortunately for the streaming devices, we do want to short them. However, they are too low right now. So Netflix, Disney, Spotify, Roku, I think that it is okay to be bearish on them, but to short them at these levels might not be optimal for you. So you might as well short the other companies that haven't fallen down as much. Like example, Steve Madden or SHOO is still a good short from the chart perspective. So we can see that shoe is still here at about $43. So that would be a good opportunity to sell. You can see that if Victoria's Secret trades at 52, you can still short that. I'm of the view that you can short the banks. So Wells Fargo here at about 48 to 50 would be a good short idea. JP Morgan, even JP Morgan is having a hard time here about 135, 140s. So just look to short financials, either the company itself or the companies like the XLFs or just simply Bank of America. So Bank of America was falling down as well. So yeah, that would be all, and see you later. Just be careful for for positions. But my sense is that there is a time and place for put options to take place in the position of your portfolio. And in order to hedge yourself for these downsides, as we are seeing it all throughout, including commodities, last night was one for the books. We thought that commodities were gonna be stable, and you'll see that gold was stable. But last night, most commodity-related miners fell. So you've got JNUG falling, you've got GDXU falling. Yeah, so all of the leveraged gold funds were falling down big. Silver was falling down big. Uranium was falling down big. So my sense is that the commodities were falling mostly as people are looking at a potential demand destruction. So these are what's happening right now. Chipotle, potential demand destruction that people are pricing in. So yeah, this is a potential short. Louis Vuitton, in case you wish. Louis Vuitton and Lululemon are potential good shorts if you are looking to see a potential slowdown in consumer spending, or simply just short XLY, which is the ETF for consumer discretionary, or the triple levered consumer discretionary fund, which is WANT. So all in all, we are quite bearish, despite the fact that it is a bit hard to see where the bottoms of the market are. There's just too many new lows happening. You're seeing Shopify just break down to new lows. Breaking 500 is now trading 481. C Limited, as I said, just on the brinks of breaking $85. RK is actually looking to retest or break down to new lows. A lot of healthcare names looking to either retest that March low. So it looks as if the Nasdaq is primed to fall further lower. 13.7 can fall 13.2, 13.1. It all remains on how Facebook will move next week. Facebook reports earnings next week. That would be your catalyst, either on the up or the down. Same for Google, earnings next week. Same for Apple, earnings next week. So you've got a lot of earnings on the big caps. Apple, Google, Facebook will dictate on how the markets will move. But given the onslaught of shorts punishing most stocks in the market, my sense is that whether the earnings are good or not, the market will sell them anyhow, which was evident, which is what happened actually with Tesla. No matter how good the earnings were, it was just sold down by the market. So my sense is that everyone is buying put options ahead of the earnings calls for Facebook or Google or even Apple. Okay, thank you very much. And that's it. Bye-bye.